Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Saint Gobain. Can this company be 3x from here in the next 3-4 years, or should you avoid the stock altogether? So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Saint Gobain, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, it will help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and also a number of podcasts that I put up there. For detailed market or company analysis, you need to directly contact me on email and we can work things out. Now about the company, Saint Gobain was established in 1985 and has worldwide leadership in residential construction glass material. They also help in industrial application materials of glasses. So huge industries or conglomerate business centers need to have glasses painted all over the place, and it is from Saint Gobain that the suppliers are. Commercial spaces are also being helped by the company. It has a nationwide presence, and not only that, it is also present in Europe, Asia, and in Americas. The market cap of the company is only about 600 to 800 crores, and that is the most attractive part about the company here in India. If you look at the financials, then the Q1 numbers are not that great, and it is as same as they have been for other companies because of the shutdown, etc., and the kind of, you can say, pandemic that we are facing. Sales dropped by around 83%. Profit, the company went into losses from a profit of 2 crores. Very good promoter holding. So the promoter holding is around 75%, but around 3 to 4% only of institutional holding, about 1.3% of only, you can say, FII holding in the company. The return on equity is 8%, operating profit margin is 10%, which I believe is set to improve going forward once the demand comes back for their products. It is completely debt free. They have little debt, and which is you can consider as working capital debt. So what is ailing the industry altogether and the company? Results all across the board has been very mediocre. So results of, you can say, many tiles companies, you can sanitary ware companies, other companies which are unlisted but are in the space of renovation, home renovation, kitchen renovation, and decor. They are not doing that well, and it is not only here in India, it is across the globe. The situation is very abysmal with respect to construction activities, real estate, and real estate ancillary plays, the products which are used in the different houses, you can say, or corporate houses. Then raw material cost has also hurt the company over the last 2.5 years, from oil being at $16-17 per barrel, at $20 per barrel, or even going to zero at one point of time. It has also increased a lot. Other raw material cost of other silica products, as well as, you can say, chemicals, have also increased, and that's why the chemical companies are also doing well, but the companies who use the chemicals are not at the same level, and so their expenses has increased sharply. Construction activity has virtually stalled over the last 6 months. That is for sure. At least for the last 6 to 9 months, whole of 2020, the construction activity, whether it is commercial or it is domestic, or you can say retail, it has completely stalled, and so there is no usage of the glass material, that is, or the glass products that Saint Gobain makes at the moment. And the lockdown or the shutdown has also escalated the matters, and you have seen the numbers in India itself, for the GDP and for everything else. So this industry or this company has not, is not spared either, and so they are facing the same trouble. In 2017 December, early 2018, the company was having very lofty valuations, and it had to correct. So it was trading at something like 50-60 times earnings at around 80-82 rupees. It had to correct. It has corrected to around 35-40 rupees during the lows of March around 35 or so, and then has taken a move on the upward journey. I'll discuss that later on in this presentation. But another point I want to make here, that the economic stress altogether is marring the industry, and not only this construction industry or construction ancillary. You look at automobile in ancillary, you look at automobiles itself, the textile industry, everything has got absolutely decimated, and that has led to the troubles that the company is facing altogether. So why has been the surge in the stock? If that has been the case all across, then why the stock has moved up from those 35 odd levels all the way to now 60, 65? Attractive valuations when the March fall happened, absolutely at around 35 rupees. If you consider that the company would be having an EPS of 5 or 6 rupees, say in FY22 or 23, somewhere there, then at around 35 rupees, trading at only 6 or 7 times earnings, which is absolutely dirt cheap. When you consider Saint Gobain as a consumer company, do not consider it as a construction real estate company. I would consider this as a consumer company, and in that regard this should be trading at 40-50 times earnings. So clearly, even if it trades at 35-40 times and comes out with even 4 or 5 rupees of EPS, then we are looking at 200 plus on the stock. But then the numbers have to come in. The numbers have not come in, and I want to give a word of caution for that. Although the valuations are attractive, the numbers need to come in. And there lies my second point. The second point is about expected growth in the housing going forward. There is a huge expectation that the housing industry will do well from March of 2021 or in FY22 onwards. If that doesn't happen, if commercial real estate and you can say retail real estate activities do not pick up, I don't think this company will do that well. So that is a huge word of caution, and that is where I'm not sounding that extreme bullishness that okay, this is heading to 250 and buy it and all that. I am not saying this, but if things really get well on the ground, then rather than buying the real estate or infrastructure company, we can look at ancillary firms like Saint Gobain. Government measures on real estate by bringing in, you can say RERA, by bringing in different real estate act, the REITs, etc., to eke in money, that should fructify 2-3 years down the line. So this is not a 6 months to a year play. This is not a momentum play. This is a calculated risk investment that one can take with a strict stop loss of 15 to 20% with whatever risk you can take, and then look for a decent return going forward in 4 to 5 years time. It is a market leader in its space, there's no doubt about it. So if things really get well on the ground, if things really get going in the industry, Saint Gobain will outperform everyone else. The pent up demand will play a part, and I think once things normalize, maybe in March or in June next year, I think we will see a surge in the stock. Now I don't know that surge will take the stock to 200 or 150 or 100, I don't know, but there will be a surge in the stock probably 12 to 15 months down the line. I don't know when it will happen, but it should happen, and numbers should improve. You can take it that these numbers are perhaps the worst that you could expect in these companies, and it should improve. The point is how much it can improve and whether the price surge has equated the amount of number or increase that would take place. So what needs to be done? In my opinion, you should buy on any major declines, have a good 5 year view. It can be 200. If things really get well, this can be 200. So closer to 45-50 is a very good buying level. So this was my video on Saint Gobain. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.